Hey, what's going on, everybody? I am TShroom here hosting Copy and Crypto, and it is the first time I've hosted this all by myself. I'm very, very excited to be here. We've got a very big show for you today. As you know, the ETH merge could be happening today. It's very likely going to be happening today. We're going to be talking about that for sure. But we've got one of the world's best guests on today, Caleb Franzen. He's one of our favorites. He's awesome. We love him.
That guy, Caleb Franzen.
You gotta love him. But before we get into the merge and the CPI data and talk about that with Caleb, I want to introduce my producer, Smay Nakamoto. Smay, how you doing today?
Well, gee, I'm doing fantastic. Why is my button not working? Hold on. Hey, there it is.
And look what he's got going on behind him.
Oh, by the way, yeah, look, I got NFTs. Look at. Oh, hold on, let me show off my NFTs.
Woo.
So right here we got a contribution from ADA and Vedas. Shout out to them. This cool little AI snake thing. And
Look at
then
that.
Turtle King. That's
Hey.
my NFT, guys. That's
Heyo.
my NFT, Turtle King. So shout out to Turtle Troops Project. I heard that it was a rug pull, but there it is. but anyways.
Yeah, maybe that's what you should label it. We're talking about how you should put labels on those. Maybe label that one rug pull. Maybe we should intentionally get rug pulls, our top favorite rug pulls. That would be kind of funny. Well, Smay, why don't you go ahead and read some green names for us?
Oh, gee. I would love to read green names. All right. So here we have green names. We have Justin Eubanks. We have Greg Jenkins. We got Mike Lowry. We got, blue name, Matt C. We got Anthony in the chat with a blue name as well. We love our blue names. We got Tyler Main. We got Brad Geidel. We got Agent Gold. We got Tyler Main. Eric Brubcaker. That's the first time I've read that name. I hope I didn't butcher it. Daniel J. And Grainford Incorporated. It's 420 Wood CSR2. And let's see here. Steve TShroom. Shout out to all of you guys.
Whoa.
Shout out to all of you guys. This is great. But you know what else supports this channel immensely? Is our beautiful and wonderful sponsors. So
Hedge.
I'm going to tell you guys who our beautiful, wonderful sponsor for today is, and that's Hedge. Guys, if you wanted to divide a percentage of your paycheck directly into crypto and directly into the cold wallet of your choice, then look no further than Hedge. Hedge is a payroll conversion solution that allows you to convert a percentage of your payroll directly. You don't even need to worry about your HR. You guys can convert that directly into crypto of your choice. Put it in your cold wallet of choice. Super secure, super awesome, future of Web3. You want to get paid in Bitcoin. I know you do, so check it out.
Awesome. Well, if you're listening to the sound of my voice now, you are in the market pulse, baby. Let's do it. Smay, if you'll go to my screen, we're going to start off, as we almost always do, with the Fear and Greed Index, which has actually ticked deeper into fear. So yesterday, we were starting to get out of the fear zone, and we got into 34, but now we have gone back deeper into fear, down to 27. Not really a big surprise there, considering the price of Bitcoin got really, really knocked down, had to give back a lot of those gains. But we are still not in extreme fear, so that's a positive. All right, moving on to something that's really interesting. The CME futures that predicts the rate hike is going actually even more towards 100 basis point hikes. So now 37% likelihood of a 100 basis point hike. Again, folks, I still do not think that this is very likely in all reality that we'll see a 100 basis point hike. I don't think that the numbers are hot enough for that, but you can rest assured I will be asking Caleb about that when we get to our discussion section. But more than likely, we're going to get 75 basis point hikes on the September 21st rate decision from Jerome Powell. And obviously, that is really, really important. If you missed it yesterday, okay, we had a big inflation print on the 13th we had been talking about on the show, and here it is. It was mixed results. So we have the forecast and I'll do the core inflation first. The previous core print was 5.9. That printed yesterday as 6.3%. So that went up, and it also missed, meaning printed higher than the forecast. So this was overall pretty bearish. That's not good, right? That means that, more likely than not, we're going to get the 75 basis points versus 50, but that also has pushed the CME futures to predict that we may even get a 100 basis point hike, okay? But there's a little bit of a different story on the headline inflation. And The headline inflation, previous print, was 8.5, and now the actual print yesterday was 8.3, and that actually came higher than forecasted. So this is mixed. This is better than previous, right? But it's worse than the forecast. So that is really, overall, this you'd have to categorize this as bearish, definitely leaning bearish, but also, fairly bearish, especially because that inflation did not beat the forecast, came in higher than what was forecasted. So economists were thinking it was going to be 8.1, but actually it came in at 8.3. Well, we've looked at the fear and greed. We've looked at the CME futures. Let's go ahead and look at the countdown, folks. 16 hours and 51 minutes is what Google is predicting. Let's refresh this just to make sure we get an accurate. Okay, yeah, 16 hours and 40 minutes now it's saying for when the ETH merge is going to be happening. And look at these little bears down here. Notice anything different about these bears, Smay? Can you see them?
They're touching.
So the bears are a little closer. And if you look at the thumbnail of this video, that should give you a hint of why these bears are here. It's not a bearish signal. That's what was my first thought when I saw this. Google kind of nudging and hinting towards the Ethereum merge, which is something they haven't done until this. By the way, all you have to do is just Google Ethereum merge and you get one of their Google generic search results, which are always very, very accurate and very helpful when there's consensus on information, of which this is fairly agreed upon, that the ETH merge is going to happen in about 16 hours and 40 minutes. So these bears are closer, meaning the merge is imminent. This represents ETH1, this represents ETH2, the black bear, and the consensus and the transaction, the execution layer coming together and hugging. So that's really, really awesome. So let's go ahead and get into what to expect from the merge. So what does a successful merge upgrade actually look like? And we can actually look at that down here. This is what the block proposals will be looking like according to Ben Eddington, a product lead at Ethereum research and development firm Consensus. He told Coinbase that the first thing he'll be paying attention to when the merge happens is whether or not blocks of transactions are being proposed to Ethereum's proof of work chain. So that's the first thing he's going to be looking for. And folks, look, I'm not a dev, so I don't know exactly what to expect. So that's why this article is really important. I'm more of a trader and investor. So these are the kind of things that I seek out, this type of technical information for big, important moments. And we're going to talk about why this ETH merge is extremely highly anticipated here in just a second. And it's not necessarily positive news. But one can view this data on-chain explorers like this one and this one. You can go to those, either one, to observe this data. And both sites list every new slot as it happens, along with whether or not a block has been proposed for it. So this is what he's predicting. This is the up and the down, the good and the bad that we could have here in about 16 hours. Immediately, we will see empty slot, empty slot, empty slot, and that would be the sign of trouble. So we do not want to see empty slot on either of these scanned websites. If we see block, 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 then we know we're good. Eddington explained. So that's what we want to see. If you're going to be tuning in to any kind of live stream later tonight to see the merge happen in real time, to see that the blockchain kind of manifest either one of these outcomes, this is what you're going to want to see, block, block, block. And more than likely, the coverage that you're watching is going to be highlighting that and unpacking that a little bit as well. But we've done it for you here. So maybe you can be the guy at the party, or gal at the party, or in the chat, laying down the knowledge on what to expect there. Well, we're going to move on. Here's how the 5 biggest centralized crypto exchanges are navigating the merge. And I thought this was important to bring up because ahead of the upgrade, many leading crypto exchanges will be suspending deposits and withdrawals from Ethereum ERC20 tokens. And that is big news. This is, it could be controversial, but I think most people in the crypto space hopefully can understand why this is happening. But let's break it down. Going to look at some of the top 3 here. Binance, the largest crypto exchange, intends to suspend deposits and withdrawals for Ethereum ERC20 tokens 1 hour before the merge happens. So if you log on to Binance and you're trying to withdraw or deposit Ethereum, don't be alarmed. They're only doing this as a precaution, right? They're kind of freezing the withdrawal and the deposit. And Coinbase is doing something similar. Coinbase plans to briefly suspend new deposits and withdrawals for Ethereum tokens a few hours before the merge. And FTX, though, interesting, FTX is aiming to support continuous trading during the merge. Doesn't say anything about withdrawals or deposits there, but you can kind of see the change in the tone there. They're trying to be positive in their blog post, but the real takeaway here is that your normal service from your major exchanges are not going to be in operation during this merge time. So in about 16 hours and some change, expect to not be withdrawing or depositing Ethereum on these major exchanges, and do not be alarmed. Don't go on Twitter and start freaking out. Just remember that it's all going to be okay. And also keep in mind that on other exchanges, they may be allowing withdrawing and depositing. You just need to go on their website and try to understand and view their guidance. They probably on their Twitters, they're going to be issuing that guidance as well. But the point is here, do not be alarmed, guys. This is just a really important time. And it is a very, very important time, as you can see here in our next story. Merge focus hedging makes Ether shorts most expensive in 16 months. Take a look at this chart here. So this, the last time this was happening was when, I believe this was when ETH was pumping big. And so people went short on it because they were anticipating it coming back down. Well, as you can see here where we are, the shorts are mounting. So the compensation paid by shorts to longs to keep their positions open has spiked and reached the highest level in 16 months on Binance, reflecting excessive demand for bets on the potential price declines, obviously, of ETH there. So people are taking short positions, meaning they are betting that ETH is going to go down. They're positioning themselves to profit from the decline of ETH prices. Why would they be doing that? Well, more than likely here, folks, it's not because people think the ETH is going to tank. What they're doing is people, institutions and retail investors who have a bunch of ETH, what they're doing is a very common trading investment strategy is they're hedging their bets, right? So you're betting on both sides so that if one outcome happens at an X size pace, at an X size volume, you're not going to come out with a giant loss. So hopefully that makes sense to you. Does that make sense, Smay, for the most part, what hedging is here?
Yes.
So don't be alarmed if you're going to be reading headlines like this, that, highest shorts in 16 months, that might seem very, very bearish, and you could definitely interpret it as bearish, but ultimately what this is just people covering their butts, right? Maybe they're investing for clients, maybe, they just don't want to lose money. So that's why they're doing this. More than likely after the merge, you're going to see a ton of that short volume come off the markets, come off the books, and then it'll be just smooth sailing from there. Hopefully, if we get those positive outcomes like we were anticipating there from that ETH dev. Well, we've got another big story. Doesn't have to do with the merge or the CPI, but this is a very, very big story. I think you'll agree, Smay. So Charles Schwab, Citadel, and Fidelity have launched a crypto exchange. Guys, this is huge. EDX is the name of that exchange, and this kind of blew me away because they haven't. I mean, obviously Fidelity has been involved in their 401ks, and there was an article yesterday talking about how they wanted to get into bringing crypto to retail. I didn't think it was going to come this quick, but guys, this is really big news, and I'll explain why in just a second, but let's read through the article. Named EDX Markets, it will be the first of its kind exchange giving investors safer, faster, and more efficient cryptocurrency trading. The intention of the industry consortium is to build market infrastructure that contributes to increased optionality for liquidity to facilitate a more efficient, secure, and cost-effective process for trading digital assets. And you can see right there's Fidelity Investments. So they're really kind of the big name here. The Boston Bank is extremely, extremely well capitalized. It's a very large bank, and they're also partnering with other really large financial institutions here. Why is this important? This is extremely big, and it's not necessarily the best thing ever. I think that the market's going to have to digest whether or not this is great for crypto, because you could argue kind of centralization here, but we'll have to see exactly how they kind of roll this out, whether it's going to be centralized or not. More than likely, it is going to be centralized because there's already precedent for that. Some of the biggest crypto exchanges are centralized, so you can only assume that it's going to be centralized. But why is this big? So this is big because now the financial industry, big American finance companies, have sweat in this industry. They put a stake in it. Now they have something to lose, right? They more than likely paid the devs that made this exchange a lot of money, right? So they paid for that. They've got that capital sunk into this project. And they're also putting their reputation on the line, right? If this EDX was to get hacked, that would be extremely damaging. So what does that tell me? That tells me that they have a ton of confidence to go ahead and go to the press and say, yeah, we're launching this. This is going to be launched. And we're confident in the security of it. We're confident in the integrity of it. And we're going to launch it. And we're Citadel, we're Fidelity, and we're Charles Schwab. We're some of the biggest names in American finance, some of the biggest name in global finance that there are. So Fidelity especially here is the one that's really, really impressing me because they have already done, they've already announced that they're going to be offering Bitcoin into their 401ks up to 20%. So here they're just, adding to that, willingness to go in and into this unknown industry of crypto, and they're going to be leading the charge. So very, very exciting there. Also note that it's not BlackRock. BlackRock's not on this list, right? They had a big partnership recently with Coinbase that they announced. So potentially, this is kind of the other half of the financial industry saying, hey, we got to wake up. We got to get our own exchange because BlackRock is going to be, rolling out some big stuff with Coinbase soon, and we got to make sure that we're getting ahead of it and make sure that there's some competition here in this industry so that BlackRock doesn't sop up all the market share with their giant 10 trillion market cap. Of course, all of that money isn't going to go into crypto exchange, but you can rest assured they definitely have some very strong strings to pull in that regard. Moving along, we've got a little bit more of a pessimistic, doesn't really matter about the price of crypto, but this is important to some extent. I guess it's more the drama, the intrigue. But South Korean authorities issue arrest warrant for Terra co-founder Do Kwon. So there he is, the guy who behind Terra Luna Labs, Terraform Labs, and man, it was just not. Maybe that should be our question of the day. It's like, would you rather be Do Kwon, or would you rather be something else that's really, really not desirable? Well, let's go ahead and read it. The warrant was reportedly issued in relation to violation of capital market rules and targets 5 more individuals who are currently residing in Singapore. A class action lawsuit was brought against Kwon and Terraform Labs in June in the U.S. District Court of Northern California. So, man, this is kind of what I was talking about yesterday, where at the beginning of any kind of Wild West industry, whether it be gold, whether it be the dot-com bubble, you're going to have bad actors. And part of me still thinks that Do Kwon, and the folks that he went into business with at the beginning were not actually nefarious. They were not coming in and trying to screw a bunch of people over. They were actually curious innovators. But what they have become, possibly by the amount of wealth that they got so quickly, has turned out to be utterly reprehensible. And it's very difficult to look at Do Kwon now and see someone that you would want to aspire to be if you're a young blockchain developer. It's definitely not a great time to be Do Kwon. Well, we've got one more story, and this one is pretty positive, actually. Very interesting. New York's Museum of Modern Art considers buying NFTs with proceeds of a $70 million auction. MoMA. So if you've been to New York, you've probably seen ads for this, or maybe you've even been there yourself. I have been there. I believe this is where a lot of the Egyptian artifacts are kept, and a lot of the Greek artifacts are kept. Smay, have you ever been there? Have you ever heard of MoMA?
No.
Okay. Yeah, I've been there once. It was honestly really, really sick. Like, it was awesome.
I have a question.
What's you got?
Why would they have ancient artifacts at a museum of modern art?
It's a good question, but I'm almost certain you could Google it, but I am pretty certain that this is where they have the Egypt exhibit. I could be wrong about that, but I'm pretty sure. You can let us know in the chat if I'm wrong about that. I'm not an expert, but I definitely have been to MoMA, and I'm pretty sure this is where they have the Egyptian art, because this is also where they have the big fashion. Anyway, so I'm pretty sure, but I could be wrong. Doesn't really matter. New York's Museum of Modern Art is considering buying non-fungible tokens with some of the proceeds of an auction of William S. Paley's art collection, according to the Wall Street Journal. The museum director, Glenn Lowry, said that the intention is to extend the digital reach of the museum after attendances slumped during and after the pandemic. Not a big shocker there. The museum has a team of people keeping tabs on digital art market, and it is considering purchasing digital art connections to NFTs, Lowry said. Why is this important? Why is this This is on the front page of CoinDesk today. Who cares if some museum is thinking about getting NFTs? Well, this is important because MoMA is one of the biggest art museums there is. There's the Louvre in France, and there's a couple other ones.
That pronunciation.
Louvre? The Louvre? I don't know. I've been there too. That's where the Mona Lisa is. And I saw it, and it was underwhelming, as everybody reports.
Also, I'd just like to note that a lot of people are correcting you, saying that they do not hold.
They don't?
It doesn't seem like that's the place that holds.
I wonder which museum it is that has the
Probably
Egyptian.
the Museum of Ancient Art.
I don't know, man. I don't know. I'm pretty sure it's MoMA. I'm going to stick to my guns on this one, but I still reserve the right to be wrong. Maybe Caleb will know. We'll ask him. But anyway, okay, so why is this a big deal? Because very, very wealthy and very, very influential people go to this museum. There's all kinds of huge events. And millions of people go, even though they're actually, I don't know what the number is now of the frequenters of this museum, but it's in Manhattan. This is where a lot of people who are on tourist expeditions to Manhattan go. This is one of the big places to go when you're in New York. You go to Times Square, you go to Grand Central Station. You go to a bunch of different places depending on what you're interested in. Maybe go see Wall Street. That's what I did. Still got a picture of myself on Wall Street with the bull. Man, that was a while ago now. But then you go to the MoMA, and now people that are going to be going to the MoMA could potentially be seeing NFTs, and the art world may be taking this much, much more seriously. This is kind of the allegory here, is that they're bringing NFTs, the art world, kind of the pinnacle of the art world is bringing NFTs into their castle and symbolically saying NFTs are here to stay in the art world.
Absolutely.
If this goes through. Now, I kind of thought that it was a little bit of a bigger deal that Coffee and Crypto now has NFTs. Can you showcase them there, Smay? But apparently the MoMA also got the memo from the Illuminati to go ahead and get NFTs into their castle too.
From the what?
From the Illuminati. Oh, you didn't get the memo from the Illuminati? Okay, I did. I'll forward it to you. But anyway, all right. So that is going to be our market pulse, folks. I want to go ahead and leave my screen really quick. But what I want to do is go ahead and invite Caleb Franzen in. Hopefully he can hear me. How are you doing, Caleb?
What's up, Taylor? Yeah, I can hear and see you. Hope everyone's having a great morning. Man, I can't believe it's already Wednesday. Yesterday was pure chaos.
Yeah, we're gonna get into that. But I have a question for you, and this isn't the question of the day. Have you been to the MoMA? Have you been to New York, where the MoMA is?
So I've been to New York only twice now. But I have not been to the Museum of Modern Art there. When I lived in San Francisco for about 2 years, I used to go to the San Francisco Museum of Modern Art, went to a couple events there and had a great time, but never the one in New York.
Mm-hmm. Okay, it's the Met. The Met is the one, if you go to my screen, the Met collection as ancient art. Okay, so Met, MoMA, I got him confused. Classic TShroom, doesn't know his art museums. But we'll move on. But Caleb, we're extremely happy to have you on today. It's super, super awesome. Every Wednesday is Caleb Franzen Day. And today especially is extremely, extremely important because we're going to be unpacking the CPI data and see what other wizardry you have been able to dig up to hopefully look into the crystal ball of what's coming for the American economy as we march into the fall here and wrap up the summer. But before we do any of that, we need to get into the question of the day. So, Smay, you don't need to go to my screen for this, but the question of the day is loading in my brain right now. But that question of the day, oh goodness, is not where I've pasted it.
All right, so what we're gonna do is we're gonna just go ahead and just come up with something.
No, I got it. Would you rather start a colony on another planet or be the leader of a country on Earth? Go ahead, Caleb. Tell us what you think.
Leader of a country on Earth for sure.
Okay.
I'm not much of a pioneer, so I guess exploring an entirely new planet and trying to set that whole system up for success would be a little bit too much responsibility for me. So I'll just adopt something that already exists and try to do as best as I can.
Yeah, okay. I agree with that sentiment.
All
right. So what? Well, real quick, what country would you want to be the leader of? And try to pick an esoteric one. Don't pick the obvious.
Give me Liechtenstein.
Liechtenstein?
Ooh,
that very high GDP per capita. So very, very good.
Let's go.
Yeah, Smay, what country would you pick?
Oh man, I don't know. Maybe I feel like it'd be cool to be like the leader of New Zealand.
New Zealand? That's a good one. That's a good one. I would be interested in doing, for sure, being a leader of a country. I have for a long time considered myself to be not in the group who would go to Mars, but there's a lot of people who would. Surprisingly, there's a lot of people who are like, yeah, I would give up my career, I would give up my relationships with my family and friends and romantic relationships, and I would just go to Mars. And I can't relate to that. I would rather hang back and kind of see what happens from here. But let's see what the chat is saying. I don't know if they have had enough time to really talk about whether or not they would rather go be the leader of a planet or be the leader of a country. So we will go ahead and move on and maybe circle back on that. But so let's get into it, Caleb. So the CPI print, mixed. The headline, you could kind of derive a little bit of bullishness from the headline inflation print, but from the core inflation, it was pretty much negative all the way across. We broke down the headline inflation breakdown that the Bureau of Labor Statistics prints. They're kind of their spreadsheet there. So I'm going to go ahead and give the floor to you. What was the most exciting thing that you saw about the CPI? You know, what are the things that you took out and that you thought that were the most important? And you can share your screen if you'd like.
Okay, thanks. I think just generally speaking, I think you're right. And I posted kind of my immediate reaction on Twitter talking about this, but basically that the silver lining was the fact that we did get that continued deceleration in headline CPI. So we went from 9.1 to 8.5, 8.5 to 8.3%. And so I think from a headline perspective, that's good news. But when I was on your guys' show last month reviewing the July CPI data, I had mentioned how all of the disinflationary pressures that we saw for the month of July were really coming from the decline in energy and commodity prices, specifically fuel and gas. And it seems as though we had basically the same kind of dynamic once again. And if I remember correct, on a year-over-year basis, the core CPI was actually flat from June to July. I think it stayed flat at 5.9%. But for the month of August, we had an increase from 5.9% to 6.3%.
Yeah.
And so, you know, the Fed doesn't target a certain level of core CPI, but it gives them a little bit more context and even helps to highlight the fact that, you know, the whole kind of energy sector, crude oil, natural gas, everything in that entire space is likely acting as the largest risk event or threat to the Fed's success, because, you know, we're seeing a massive decline in energy prices. But even still, I think I looked into the data and it was like since June, fuel or gasoline costs had fallen about 16% since June. But over that same time period, the all items CPI index increased by 0.1%. So what would the environment be like right now if crude oil prices and energy prices across the board were flat since June? We'd still have you know, a significantly higher print on the CPI. So, you know, the Fed is looking at that and saying, I don't know what they're saying, but I think they're recognizing the fact that further turbulence or volatility in crude oil prices, especially if it starts to rise back again to the upside, is likely going to pose the largest threat to their success to bring inflation back down, at least in the short term, because we're still seeing a broad basket of all other consumer prices accelerate substantially.
Yeah, absolutely. And it's Smay, if you'll go to my screen, I've got the oil chart pulled up here, and Caleb is exactly right. So from the end of June close to where we are today, oil is down 16%. And I'd say absolutely that has been the main contributor to why headline inflation has been able to come down. But core inflation does not take into consideration fuel in the same way. And so that's why that is outpacing, you know, and I'm really curious to know, and I couldn't really find the data on the core inflation, but what is getting more expensive, the most aggressively in core inflation? Is it housing? Is it, you know, like computers? Is it like, what is it that's getting more expensive? Because fuel is going down and, you know, a lot of commodities are coming down as well. But were you able to find out what is getting more expensive specifically?
It's shelter. Shelter is, I think, rising at one of the fastest paces in a very long time. I think even for last month, it was at a fairly high and extended level.
Yeah.
And it's interesting because the shelter component is very confusing for a lot of people because, you know, people might be scratching their head. How is the shelter component? I think it was up 0.7% on a month over month basis. And I'm not sure what it was on a year over year basis, but I think it's right around that like 5 or 6% level off the top of my head. And so people are probably scratching their head. How the hell is shelter up 6%, but rents are up over 15% year over year, and the median home price is up like 17 or 18% year over year, right? And, you know, this whole kind of concept of how they calculate shelters through something called owner's equivalent rent, where they go up to a homeowner who lives in that primary residence, and they ask them, if you didn't live here and you decided to rent out your house, how much would you rent it for? Yeah. And they poll and survey that data and then track it over time. So it's basically some completely like non-tangible, like fallacy. I don't know. Like it's just it's like the biggest mystery to me in terms of how we actually calculate the shelter component. But even still, it's rising at the fastest rate. And I've seen some other very credible economists talk about this. And they talk about how the shelter component lags the real estate and rental market by about 16 months. So everything that we're experiencing today in terms of the shelter component is essentially where the market was for the actual housing market about a year and a half ago. So if we think about all the craziness that developed in the housing market at the end of 2021 and basically the first quarter of this year, it's very possible that the shelter component is going to continue to accelerate to the upside.
That is a really, really compelling insight, because what that says to me is pretty bearish, because if we start to get that data kind of seeping into that core inflation print, then the Fed could continue to see core inflation go higher and higher and higher, where cost of goods like computers and desk chairs and bed frames and other things aren't actually going down. And essentially what you're saying is shelter could potentially disproportionately inflate the inflation numbers to where the Fed just is incentivized to continue hiking. Do you think that a narrative could permeate the financial media that would kind of countervail that effect, to where analysts could start to say, hey, the shelter pricing is actually a lagging indicator, and the Fed needs to understand and observe that and change their hiking policy and their hiking approach accordingly? Do you think that narrative could get distributed, or do you think that the market's too hard-headed at this point and they just see inflation for what it is?
No, I think you're right on the former, and I can't remember who it was. I'm sure you did the same, but I watched a bunch of videos and interviews yesterday from Bloomberg and CNBC of them interviewing different economists to basically digest the CPI data. And I think one of them, I forget who it was, but was talking about exactly what you mentioned in the former case, that this is a lagging indicator, and the Fed needs to be very careful now because they are towing a very thin line, particularly as we start to see some cracks in the housing and in the real estate market. And again, it's not like, the housing market isn't, screaming weakness by any means right now, but I think in certain pockets, we're definitely starting to see that. We continue to see a deceleration in home prices, and rental prices seem to be stagnating. But either way, when we look at just purely the shelter component, I'd love to pull up my screen here really quickly.
Go for it.
Because I've gone ahead and pulled up the FRED website, which is the Federal Reserve's economic database. And what we're looking at here is the shelter component on a year over year basis. So for the month of August, it was up 6.3%. And if we look at this, I think it's the highest pace, basically since the, kind of the hyperinflationary period of the late 70s and early 80s. And so, we're way above where we were in the 90s. We're way above this, well, actually, we're right on that same peak from April 1986. So, the shelter component hasn't accelerated this fast since 1986. Yeah. So, that's what is that, 36 years?
Yeah.
So, this is clearly, I don't want to say it's an anomaly, but we're clearly rising at a pace that's very rare and unique in terms of the shelter component. And it's worth noting, right, that the shelter component essentially makes up 1/3 of the CPI weighting. So when we think about what's really going to continue to drive the core CPI specifically, that shelter component is going to be very critical.
Yeah. Well, it's interesting because I'm running this through the filter of my macroeconomic mind, which is, and I'm coming to the conclusion, okay, so if the Fed is disproportionately and unknowingly moving their rates based on shelter prices, could this start to get into a negative loop, or would this go into actually have positive effects? Because as they're raising rates for housing, and I know this is a crypto channel, we're gonna move on after this last question, but as the Fed is raising rates, that trickles down into mortgage rates, which that would theoretically, if the demand did not change, then the cost of housing would continue to rise from here, because there's more interest in that loan. They're higher interest, so the ultimately, that would seep down into the value of the asset of the mortgage. Or would it have the opposite effect, where new families are seeing a higher potential interest rate because of the higher Fed rate, and they're disincentivized to go ahead and buy that new home, which would definitely bring demand back down to potentially back towards pre-pandemic levels. And so would that have the price lowering effect that the Fed may be seeking? There was a question in there. Do you need me to repeat it, or do you kind of understand what I'm asking?
No, I got it. I think you're spot on with the latter scenario that you outlined, because as the cost of debt increases and home prices relatively haven't fallen to a significant degree, the cost of those homes is extremely high.
Yeah.
And so this really gets into kind of, I don't want to say it's the game theory of the housing market, but in a way, if you have someone who has a primary residence who bought a house back in like 2017, let's say, right? So well before the pandemic, and they're looking at it like, holy shit, we've really kind of hit the lotto here. Let's say they bought a house in Tampa or in Phoenix, which are like the top performing housing markets in the US.
Right.
They're up substantially on their equity.
Yeah.
Right. And so they might be looking at potential cracks now in the housing market, and saying, oh shit, we better capitalize on this equity that we've built in, and we should start to look for, something else. Maybe they're going to chase a new job opportunity, whatever the case is.
Yeah.
But now they're looking at the market, and I actually finally found some data on this, which was very insightful. But basically, let me make sure I'm getting the right number here. 65% of all existing residential mortgages had an interest rate lower than 4%.
Wow.
So when we think about the average 30-year fixed mortgage rate right now is just above 6%, someone is looking at this and saying, why the hell would I sell my home, which has an interest rate on the mortgage of, let's call it 3 or 3.5%, and I've built in all this equity. Why would I sell that house to go buy something new and not all of a sudden lock in a 6% interest rate?
Right.
It makes no sense, particularly at a way higher cost for the home, because now you also have to think property taxes go up, all of these things start to happen. So it makes sense why we're starting to see a continuation of the real estate market be very clogged up. Saw some data, I forget which market it was, but it basically showed the supply of homes on the market at like an all-time low. And this was not some insignificant market. It was a very substantial real estate market. It was like, oh my God, like no one is selling their home because no one wants to, this is kind of a controversial take. And I did this on Twitter probably more than a year and a half ago. But I said that when someone owns debt at an extremely low interest rate, that's not a liability, it's an asset. Because you have a very strong ability, hopefully, to repay and to service that debt over time, right? So particularly when we think about today, someone's looking at their house, they have, let's call it a 2.75% mortgage, right? On a 30-year basis.
Yeah.
When they're looking out into the market and they're seeing home prices at or near all-time highs, and they're seeing that their new cost of debt would be 6%, that 2.75% mortgage on that house is an asset. And there's no reason for them to let go of that asset. You want to hold your assets. You don't want to get rid of them. Yeah. So it makes sense, again, why we're seeing the real estate market clog up. And I think to tie this back in, my long-winded way of tying it back into your question is, this is exactly what the Fed wants to see, because all of a sudden, if we do start to see a continuation of housing prices start to fall because there's less demand, what starts to happen is the equity that's been built up in all of these homes starts to fall. Yeah. And the Fed, I've mentioned this on Twitter several times, is they're trying to create an inverse wealth effect. When someone sees the value of their stock portfolio, their crypto portfolios, and their home equity decline substantially, they're going to be more conservative in their consumption.
Absolutely. Absolutely. Well, I appreciate you reeling that back in for me so I didn't have to do it, bringing it back to exactly why we're curious about this, because oil prices, commodity prices have seemed to come back down and normalize and do their part. They're being team players to help bring down inflation, but it's the housing market that has been so hot and for almost a year and a half now, and those prices are now what's contributing to this high inflation. So luckily, what the Fed has been doing has a good chance of bringing down those home prices. We're just hoping that those home prices don't come down extremely quickly and start to break things that that the Fed maybe was not anticipating. But while we were talking, Matt C said his interest rate was 2.85 on his mortgage. Appreciate you sharing that rather intimate bit of information, but it's useful here for our purposes. And then Brian D said he bought in 2017, locked in at 4.25. So exactly what you're saying. These are extremely competitive, very attractive rates. Dennis said he refinanced last year with a 15-year at 1.75. That's insane. Could you imagine?
It's amazing.
Our grandparents would have completely gone crazy to hear those kind of mortgage rates being available on the market. So we've talked a lot about things that probably would have, been things that swap traders would have been talking about, but it's all extremely important here because it all seeps down into inflation, which seeps down into the Federal Reserve and Jerome Powell's decision making for where to go next. Where to go next is where that, in terms of what to do with the rate hikes, that's where it comes back to crypto, because that's what affects crypto, which is seen by the street, seen by a lot of retail and institutional investors as a high risk asset. So they're looking to the Fed to say, hey, am I at the green light, yellow light, or red light right now on whether I should put my money into high risk, moderate risk, or low risk, like government bond assets? And right now, that light is saying, yeah, go ahead and hold off on high-risk assets like crypto. And so we're just waiting for that yellow light to turn into a green light on high-risk assets. And now kind of the portrait that we're painting here, Caleb Franzen is helping us so eloquently to do, is to say housing prices now is kind of the metric to watch to see if that green light is going to come out and when that's going to come out. So be tracking housing prices is kind of the takeaway here. Oil prices too, though. If oil prices come back up, and there's a lot of factors out there in global politics and global markets that could bring oil prices back up. Commodity prices could come back up. So it's not like we're completely out of the woods with those, but they have kind of played along. They've done what they've needed to do, at least in the last 3 months. Okay, so let's pivot and let's look at this. I don't know that you can see it, but the CME fund, I'm going to refresh this because we were looking at it this morning, but the CME fund rate, the CME futures predictor tool is predicting a 31 basis point hike, 31% chance of a 100 basis point hike. Caleb, what the heck is going on here? Do you think that there's any kind of teeth to this prediction, or do you think that we're almost definitely going to get a 75 basis point hike?
Well, first of all, I'd say it's about time that the market is recognizing the likelihood of a 100 basis point rate hike. This has been something that I've been saying that the Fed should have done back in June. Okay. And I was even in favor of them doing a intermeeting rate hike after we received the June CPI data, basically doing 25 basis points intermeeting. Because I think when the June CPI data came out, there was like a week and a half or 2 weeks before the July Federal Reserve meeting.
Yeah.
And I was saying, great, do 25 basis points as an emergency rate hike and do another 75 basis points in your actual meeting. Again, just ease the market into doing that 100 bips. I think, the market now is finally starting to price in the likelihood of 100 basis points, but I don't think it's actually going to come to fruition because I think that the Fed has almost kind of backed themselves into a corner based on some of Powell's recent comments. And the comment that I'm specifically thinking of and referring to is when he said that monetary policy, and this is a true statement, by the way, monetary policy acts with a lag. So we would expect that the Fed's prior rate hikes are still, continuing to have the ripple effects throughout the economy and the financial system. And so as they've already done 75 basis point rate hikes 2 times, they've done 50 basis points and they've done 25. Is that the full summary of it? Yeah, I'm pretty sure it is. If he all of a sudden comes out and does 100 basis points now, not only does it look like the Fed is almost panicking, but it also helps, again, to reduce their credibility in terms of, well, Powell, you said that monetary policy acts with a lag. We're starting to see headline inflation come down. Why is it now that you're doing 100 basis points? You see, so in my opinion, I think we'll definitely get the 75 basis points next week. And the fact that this is going to be somewhat of a controversial take, the fact that the market is now pricing in, I think you said it's a 31% chance of 100 bips.
As of right now, as of like almost
As of
11
right
o'clock.
now, right. So as of right now, the market is putting in a 31% chance of 100 bips. I'm happy to see that the market is recognizing that possibility, but again, I don't see it as an actual likelihood for this upcoming meeting. Like, I'll be very shocked if the Fed actually does 100 bips.
Right.
So if we do get that 75, I actually think that the market would celebrate. That's my controversial take. And so I would expect to see, depending on the language that Powell gives and the rhetoric that he uses in the press conference, I would actually expect to see a 75 basis point rate hike be celebrated by the market.
Right. Absolutely. Because we could have come into September with more of a 50-50 chance on a 50 basis point versus a 75 basis point. That is not what we've been served up here in September as we march closer and closer to the 21st rate hike decision day. Right. So we have a completely different situation altogether. So we have had relative certainty that we're going to get 75 basis points. So now all eyes are focused on the rhetoric, exactly what you were saying, the rhetoric. Does he acknowledge these housing prices? What are some of the other world events, geopolitical events that have been going on that could be a risk to oil prices? What are some of those that he's going to reference? And the biggest one of all, I want to see if you agree, Caleb, the biggest question or the biggest topic that he's going to refer to that people are going to be watching, I certainly am, is the future, right? So going into the fall, going into the spring, when can we expect a 50 basis point hike? When can we expect a reversal? And obviously a lot of that's going to be dependent on inflation. That's kind of been, the only standard so far with the Fed is that they're just going off inflation, which is, it makes sense. But, do you think that that's kind of the biggest question that potentially the journalists are going to be asking, and that is going to be covered afterwards, is whether or not there is going to be a time that he kind of hints to where he anticipates that rate coming down?
I don't think he'll give any clarity on that. I'm sure it'll be asked. Mohamed El-Erian is a phenomenal economist, someone who I've really admired and respected for a very long time now. And he had this quote, I think it was last week, but basically saying 75 basis points is the new 25 basis points. So when we think back to the tightening cycle from the end of 2015 to basically the end of 2018, in terms of the Fed raising rates, they were raising rates by 25 basis points every other meeting. They were very clear about that path of monetary policy, and they stuck to it over the course of that basic, 2.5, 3 year period.
Yeah.
But right now, because we have, and remember, why did the Fed pivot at the end of 2018? Not only were we having this kind of heavy market correction and at the end of Q3 going into Q4, the stock market fell about 20% going into that December period of 2018. But when we look back at that time, the CPI was actually decreasing on a year-over-year basis for about 4 months leading into December. And I think that the rate in December was around 1.9%, which was shy of the Federal Reserve's target of 2%, noting the fact that we were steadily declining for several months. And so the Fed, in that moment, you can certainly argue that the Powell put, if you will, was in place because the market was having a tantrum. There was a lot of stress within the financial system after more than 2 years of steady rate hikes. And the Federal Reserve had a way out because they weren't able to achieve their 2% inflation target. So in order to get inflation to a higher level, the Fed said, we're going to pause our rate hikes in order to try to stimulate more inflation. We don't have that today, right? Which is why I've been saying for several months that to think that there's some sort of Powell put in place right now is ludicrous, in my opinion.
Yeah.
But essentially, the Fed is trying to give themselves as much slack on a rope that they possibly can in order to give themselves a lot of flexibility and freedom to move monetary policy. My whole kind of analogy now has been that the Federal Reserve is driving the Titanic.
Yeah.
And I don't mean that in terms of something that's going to crash, right? That sounds very,
very
like apocalyptic, but just in terms of the size and the magnitude of the ship, right? Sure. And they have they can only see a football field in front of them, right? And so the Federal Reserve is moving this gigantic ship and trying to steer it to the right, but they don't know what's beyond 100 yards, right? So the Fed is they're like, are we moving close toward shore? Are we getting there? Like, we're trying to turn right, but we can only move so slow, right? So the Fed is really trying to surgically pull these levers and strings in order to steer the Titanic without, crashing, into an iceberg, right? If you want to really stick with the analogy.
Yeah. I think it's about time that with the technology we have and how automated grocery stores and gas pumps are, I think we need to start talking about real-time inflation rates, because I think that would eliminate the fog that the Fed is having to go through. Is like, I mean, from a crypto standpoint, obviously we would want the Fed to become less and less influential on markets and for the US dollar to be only really used to pay in government employees. But I think moving forward, I think we have every incentive now that we've had to wrestle inflation in the 70s, and now again we're having really, really significant issues with it. We need to start developing real-time inflation data. So Caleb, if you could go ahead and get on that, that would be great. So, but I really like the point that you made. You said it was from Al Arian. I haven't. I don't know if I'm getting that pronunciation right, but I like that concept of 75 is the new 25, because it is, because of certainty. The market thrives on certainty, and if we can continue to get 75 basis points, then the banks and the investors can be able to predict that, and they can start to let out a little bit of steam from this pressure cooker that they've been in of uncertainty, and say, okay, now we can start to let go a little bit more of our liquidity, more and more and more. And like you said, I doubt we're going to get a 100 basis point hike. That would be the only thing that would add more pressure. Well, not the only thing, but that would add more pressure. So I think from here on out, every time we get 75, it really is just more and more certainty, a little bit of the pressure coming out of the pressure cooker, a little bit of steam coming out, a little bit more and more, a little bit of fog also coming away from the Titanic, and able to let the Fed make clearer and clearer decisions as the rate stabilizes in an accelerating rate, but as it stabilizes. So really the takeaway there is 75, the new 25. Why is that good? Because it contributes to higher uncertainty. Caleb, this is a crypto channel, so we definitely would be remiss if we did not cover one of the biggest moments in crypto, if we did not talk about it. So that obviously is the ETH merge. So I think you were there for the Market Pulse listening on Zoom. Did you hear about these record high short positions on ETH? What do you think about that from an institutional hedging against the potential losses coming in on the sell the news narrative for this ETH merge? Do you think that these shorts are well placed, or do you think that the market they're going to get liquidated, or what are you thinking about this really high volume of short positions on Ethereum going into the merge?
Yeah, that's interesting, and I wasn't aware of that. Coincident to knowing that data, I saw something that I reviewed in one of my newsletters this past weekend, where it was looking at institutional asset managers and hedge funds who had one of their highest kind of net short positions since like 2008 or something like that. And everyone was kind of looking at this and saying, well, is this some kind of contrarian indicator they're going to have to cover if the markets rally, this, that, and the other, and that it could actually be some sort of contrarian bull signal. But with yesterday's carnage, right, we had the worst performance for the S&P 500 since June 2020. Mm-hmm. It looks like the smart money was indeed smarter than the rest of the market. And so with the ETH, the high level of short positions for Ethereum, I guess I'm not surprised to hear that necessarily. I'm sure we probably have something quite similar for Bitcoin as well. But the fact is that right now, Ethereum is kind of dominating the entire crypto narrative because they are basically the only project right now with an actual fundamental catalyst in terms of kind of cryptography, right? So as we think about, like I said, just any kind of fundamental catalyst, it's going to pose a large risk event. I was thinking about this the other day, and I was like, it doesn't feel right now, actually, that the risk event has to do with the actual merge in and of itself, like in that moment or within like a 24-hour period.
Right.
But from my perspective, it feels like the risk is actually like 6 to 12 months out after the merge. How do things continue to go? Do we start to see little cracks 4 months down the line, 8 months? Like, how is all of that going to play out? So I would maybe say that the fact that we have such significant short position right now is a logical thing. I don't know if those positions are going to be profitable, but I actually think that the net shorts are almost positioned in the wrong time. I don't know what the expiration on those options contracts are, but like I said, I really feel like the biggest risk event for Ethereum is is several months post merge, if that makes sense.
That's an interesting take. I think a lot of people would disagree with you. I think a lot of people, I mean, and those shorts are talking, right? Those shorts are screaming loud. The highest risk is right now when this merge is coming up. And just for the record, a lot of those contracts are perpetual, so they don't have an expiration date. So, so what I want to do now, though, is we gotta get excited, right? So we've gone from days to now hours, and on my screen is 14 hours and 39 minutes until that ETH merge, until those little bears hug. And I couldn't be more excited. It's extremely, extremely important that this goes off without a hitch, because Ethereum is such a big centerpiece for Web3 and for crypto. You know, when was the, I want to ask, because it's kind of like a New Year's Eve type of moment. So let's get a little bit sentimental here. What was the first time that you were exposed to Ethereum? When describe maybe the first time you bought it or the first time you really understood it.
Well, I was a relatively late bloomer in terms of actually allocating capital into crypto. I was a massive skeptic in the 2016-17 bull run.
Okay.
For a lot of reasons, but really kind of came around to Bitcoin, I would say, in 2019, but then didn't actually, from a fundamental perspective, but then actually didn't start allocating into it until Q3 of 2020.
Okay.
So I was relatively late on that, but that was when I had my first Bitcoin and Ethereum purchases. I remember finding out about Bitcoin. It must have been in 2014, going into the second semester of my freshman year of college, because one of my best friends at the time was living with someone who ended up actually dropping out of school to do Bitcoin mining full time.
Yeah.
Wow. And he was like pitching my buddy, who was this guy's roommate, that, dude, you got to get in on this with me. Like, you have to, you know. So I remember my friend talking about that. I remember interacting with this guy. He was like a computer science major at UCSB or something like that. And just kind of hearing about this like internet money, privatization and all that kind of stuff. But I didn't hear about Ethereum probably not until, you know, that major kind of like bull run of 2016, 17. Yeah. And it was released, the ICO was in 2015, is that right?
Yeah.
Okay. Yeah, exactly. So I definitely heard about it in
2016,
17.
2013, I think.
Oh, really?
I believe so. I'm not exactly sure, but everybody kind of remembers the first time that they understood Ethereum. We had Steven Corson on our channel a couple weeks ago. He's just kind of a personal finance guy, and he comes from a tech side. And so when he understood Ethereum, it was from a structural perspective. He saw that this was infrastructure. This isn't, cryptocurrency is so much more than just an internet currency that, all the kids are into. It's potentially what the next internet is going to be laid upon for increased security and for decentralization. And now we understand those things, but if you had understood them when Steven did, and you'd be doing really, really well. So I want to throw it over. So thank you so much, Caleb, for being on the show. I want you to tell everybody where they can find you, and I'm going to also invite you to stick around on the channel if on the show today. If you'd like, we're going to get into the super chats. If you don't want to, if you got to go, I understand that as well. But feel free to stick around. But go ahead and tell people where they can find you.
No, I got time, man. So I'm happy to stick around.
Good deal.
Definitely check me out on Twitter at Caleb Franzen. We're just above 17,000 followers on there. I post a lot of technical analysis, looking at Bitcoin, looking at something like Ethereum and different relationships. One of my favorite things to do is to denominate these different assets in something else. So instead of looking at BTC USD, we can look at something like Bitcoin divided by the S&P 500 or Bitcoin divided by NASDAQ, and really try to get a sense for risk appetite evolving in the market. Obviously, I post a lot about macroeconomic content and different kind of monetary policy dynamics and different stock market dynamics. So if you're interested in looking at different kind of technical analysis and charts and how I'm kind of interpreting price action to fit within kind of a fundamental macroeconomic framework, that's a great place to see some of my short form content. And then if you want to see more of my long form content, I have a Substack newsletter called Cubic Analytics, where again, I review on a weekly basis the most important charts and data that I'm seeing across the macroeconomic space, the stock market, and then Bitcoin and crypto. So that's why I named it Cubic Analytics, is I really take this 3-pillar approach and really try to tie in different concepts I'm seeing across these 3 markets. And again, that's a free newsletter. I do have a premium version that gives you access to an extra report every week, which is specific to Bitcoin and crypto and different dynamics I'm seeing there. But I would just even highly recommend people to sign up for that free newsletter, because I'm providing so much value, as much as I can at least, on that platform. So Twitter and Substack, that's where to find me.
Absolutely. And I am an avid reader of the newsletter on Substack, and I have probably spent the most time this year distracted on Twitter from your account, Caleb, because you have these insights that they spawn epiphanies in my brain, and I have to go then research and see if my assumptions are right based on what you're saying. But I'm going to throw it over to Smay. Smay, go ahead and tell us a little bit about Anthony Price, and then we'll go into the super chats.
Well, TShroom, I'd love to tell you guys about Anthony Price. Well, guys, a lot of you guys have probably had to deal with taxes at one point or another in your life, and they are a headache. Well, now we're in the new world of Web3 and cryptocurrencies, and that can make it even worse doing your taxes, because the IRS is not exactly very clear on how to deal with cryptocurrency taxes. So Anthony Price is not only a fantastic CPA, but he's also a crypto knowledgeable CPA. So he's going to be able to help you navigate that pesky tax code and save as much money on your gains as possible. So guys, check out link in the description, Anthony Price.
Awesome. Yeah. Definitely going to want to check that out. And Smay, it looks like we have some super chats here, so let's go ahead and dive right on into those.
I'd love to read super chats. All right, so here we have our first one is from Ripple Rich, who just put a little emoji of a guy going like that. So, and then we have another one here from Mike Markle, says, a little money for the Tim's away party after the show. When the boss is away, we will play. How do you feel about that, TShroom?
I like that. I definitely agree. We're going to do some playing. We might play some ping pong. We might play a little foosball, and we're going to make it happen. But thank you so much for that donation.
All right. Next we have here from Jason Lang, says, great job. He said all caps. So great job with the show today. Both of you. TShroom hosting. You killed it, buddy. God bless.
Awesome.
All right, and then the last one we have from Matt C says, since Tim's away, how about some pineapple pizza for the office? Great job today, TShroom and Smay. Flexing emoji, rocket emoji.
I think we are gonna have to get some pineapple pizza for lunch today, and maybe we will post a little tweet about that on the Twitter. So thank you so much, Matt C. Well, there weren't any super chats that were asking any questions about crypto or the CPI or anything like that. So there wasn't really too much to talk about here. But I did see one question about if the merge is happening today. I can't say with 100% certainty that the merge is happening today, but according to Google, and they've set their algorithms to basically clock the current difficulty rate, which if you want to learn more about that, you can, but ultimately that's kind of like how the blocks are being assimilated, are being built, and kind of the time that it takes to do that. And at a certain point in time, 14 hours and 33 minutes, as of Google's estimation, that final block will be, that final difficulty will be established, and then we will go into proof of stake Ethereum and no longer proof of work. And yes, so the ETH merge is unofficially going to happen today in 14 hours, what time would that be at, actually? 14 hours, 33 minutes. That's going to be really late at night, isn't it?
Yeah.
Yeah. So I might.
It's like 1 a.m.
Yeah, I might stay up and watch
tomorrow,
that.
Actually,
but we shall see. But Caleb, thank you so much for joining today. This has been the first time that I've ever hosted Coffee and Crypto. So if you're watching this after, or please leave some comments in the chat to let me know how I can improve. If you liked me, if you hated me as a host. But we will be going back to our regularly scheduled programming with Tim tomorrow. He'll be back in. We're going to be diving into some more crypto awesomeness.
And he's on Around the Blockchain tonight, baby.
And he's on Around the Blockchain tonight. But before I go, definitely go check out Caleb Franzen's Twitter and his newsletter. And thank you all so much for watching. We will see you tomorrow. Peace.
Oh, I got a real good feeling.